When we talk about business and personal finance news, it is important to speak with the numbers to get a right perspective. Last week, we saw RBI increasing the repo rate in the latest Monetary Policy Committee meeting, and today the inflation figures are out. And guess what? It's bad news. Hello and welcome to Money Time at Money9. I'm your host Ajay, and let's kick off today's bulletin with some news on inflation. Now, after falling for 3 straight months, retail inflation has come at a 3-month high of 6.52% in January 2023. Both rural and urban inflation have risen in January. Retail inflation increased due to the high inflation of cereals, spices, footwear, fuel and light, while low inflation of vegetables, fruits, sugar, oils and fats helped prevent inflation from increasing abruptly in January. And the dosage of inflation continues, this time to rental value of houses. Rent of flats in India have gone through the roof between 2019 to 2022. According to a report by Anarock, rent for a 2 BHK in the top 7 cities has gone up by 23% after the COVID-19 pandemic cases began to subside. Rent has increased so much because of the reopening of the economy. Most of the offices have not adopted 100% work from home model. Rather, they have settled with a hybrid model. Many employees have been called back to work, and as a result, demand for flats have risen sharply since 2019. In some places like Noida, rent of a 2 BHK has increased to around 19,000 rupees in 2022 from 15,500 rupees in 2019. We've also covered the same news in today's Lunchbox podcast, which you can download the Money9 app and listen to it. And from rent, we move on to banks giving almost 9% interest on fixed deposits. Account holders are shifting their funds from savings account and current accounts to FDs, according to a report in the Daily Indian Express. This has been going on since the second quarter of the current financial year. The rate of interest on fixed deposit had fallen to very low levels during the COVID-19 pandemic. But in the last 1 year alone, banks have raised FD rates by an average of 2.13%. The shift in funds from saving accounts to FDs have impacted CASA ratio of banks. And talking about FD rates, IDBI Bank has increased the interest rates on fixed deposits to the tune of 6.75% on FDs of 1 year. Senior citizens will get 7.25% on this FD. IDBI Bank is giving an additional rate of 0.75% to senior citizens on all deposits above 1 year tenure. Senior citizens can get as high as 7.5% on FDs of more than 1 year to 2 years. On tax saver FDs, general citizens will get 6.25% while senior citizens will get 7%. Finance Small Fincare Bank, on the other hand, has also increased FD rates. Account holders will now get as high as 8.11% on FDs of 750 days. Senior citizens will get 9% on this FD. And with the RBI raising repo rates to 6.5% last week, Public Sector Bank of Maharashtra has raised the lending rates. The public lender raised 1-year MCLR to 8.4%. MCLR, or marginal cost of lending rate, is the benchmark with which the rate of interest of loans is tied upon. The interest rates on various types of loans are tied up with 1-year MCLR of banks. So, home loans, auto loans and other types of loans of Bank of Maharashtra will also become further costlier. And we focus now on some controversial news, or should I say, on the radar. NCLT has directed insolvency proceedings against the SL Group company Zealand. Now, the SL Group company defaulted on loan which had taken from Yes Bank. The private lender had filed a petition with NCLT. The lender had claimed a default of over 468 crore rupees made by the SL Group company. The NCLT on Monday, that is today, directed initiation of insolvency proceedings against Zealand. And now we move on to news from the world of stock markets. The foreign portfolio investors continue to be on a selling spree of India's equity market. So far this month, FPIs pulled out over 9,600 crore rupees from domestic equities. FPI's sell-off had reached a 7-month high of more than 28,000 crore rupees in January this year. According to experts, FIIs continue to sell equities because of the attractive Chinese markets. Shrikant Chauhan, head of equity research at Kotak Securities, said that going forward, FPI flows are expected to remain volatile in India. He also expects FPI's outflow to continue until there is more clarity on the Adani issue. In February so far, FPIs have been consistent sellers in financial services. Well, on one side, FPIs are continuously selling their stake in India's equity markets, while on the other hand, domestic investors like institutions and HNIs are mopping up shares for the last few quarters. In fact, their ownership has increased in each of the last 4 quarters running to the December quarter of the financial year 2023. The stake of retail investors in India's equity market stands at more than 7% in the December quarter, while that of mutual funds stood over 8%. HNI stood at just under 2%. The share of DIIs stood at an all-time high of more than 15%. And now a company called Prime Database collects market information regarding stakes of various companies in India's equity markets. Prime Database recently released a report on LIC's investment in listed companies. It says LIC Shares in the total 268 companies where it holds more than 1% has increased to close to 4% in December 2022. Further, LIC continues to demand the lion's share of the investments in equities among all the insurance companies in India. LIC single-handedly holds at least 70% share in the total investments made by insurance companies in India's equity market. LIC's investment amounts to more than 10.91 lakh crore rupees. And now it's party time for the pilots of Indigo's because salaries is all set to fly off after remaining grounded since the COVID-19 pandemic. The Gurugram-based airline has said that it is going to restore policy of annual increment of salaries of pilots after 3 years. The airline will also start giving various types of allowances to employees which it had stopped during the COVID lockdown and the resultant slowdown. And from airlines we move on to two-wheelers. Yamaha Motor has driven in 5 new versions of its already launched motorcycles which start from 1.27 lakh rupees. Yamaha's latest motorcycles are the newest version of its already launched drivetrains. Yamaha has added the action control system in the latest variants. The price range of the 5 new versions of these variants vary from 1.29 lakh rupees to 1.93 lakh rupees. 2 of these drivetrains, which are FZS FI V4 Deluxe and the FZX models, are E20 fuel compatible. All the new motorcycles comply with the emission norms of the government that will kick in from April 1, 2023. Yamaha has said that by 2023 end, all of its motorcycles will be E20 fuel compatible. Well, that's it for today here on Money Time at Money9. See you again at same time tomorrow. And until then, take care and good night.